Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Dominic Keen of Britbots to talk about the British Robotics Startup Fund. Hello Dominic, welcome to the studio. Good to have you back. Firstly, I suppose for those who don't know, could you give us a bit of background to Britbots and your own experience?
Certainly. The British Robotics Funds were started about 6 years ago, and since then we've backed about 40 companies, really specialising in the areas of robotics, AI, automation, and to some extent into the energy transition. And prior to that, I was an entrepreneur. I had a technology business which floated on the stock market in 2013, and I exited that business after a couple of years. And I kind of felt at that stage that software was ready to leap out of the computer and go and do meaningful stuff in the real world, and robotics was a great way to sort of prove that thesis.
So we're here today to talk about the Startup EIS Fund. What does it aim to do for investors?
Well, it's actually predominantly an SEIS fund. So it's giving the best level of tax relief to investors and giving them a unique access to some of the most exciting companies that are kind of transforming productivity and delivering automation in the economy. Most of the investments we make are kind of business to business investments, and they're picking on sort of major themes like shortage of labour, or the transition to clean energy, to find places where these automation technologies can really transform our society and our economy.
So typically, how many companies are investors going to get in their portfolio?
So we're increasingly making the portfolios larger. So our portfolio size at the moment is somewhere between 10 and 15 companies in a single portfolio, and this really gives investors quite a broad access across all the different things which are happening in the market, and importantly across a whole range of different sort of sectors where robotics and automation is sort of delivering sort of economy and value.
Yeah. And what's the rough split between SEIS and EIS?
Yes, so for the startup fund, we're investing at least 60% of the fund into SEIS qualifying companies. So within that portfolio, there'll be 5 to 7 fully SEIS qualifying companies in the portfolio.
And then the EIS side, are they typically follow-on investments into some of your earlier SEIS?
Correct, yes. We look to select some of the better performers after, say, an 18-month period, and help them develop a little bit further and faster through that fund as well.
Okay. And so what are you looking for in an investee company?
Well, I guess first of all, we really look for sort of eye-catching investments. So we want to find businesses which have a really strong sort of market story and palpably show how their technology is able to transform the sector or the industry in which they're operating. So that's what we look for on the technology side. Obviously, we need to make sure that it's a technology that can actually be delivered, and the founder has the technical capability to do that. So validating the sort of technical credentials of the company is important. And then really importantly, I guess, is to make sure that there's also enough kind of business acumen in the founding team to allow this powerful sort of technology story to really translate into a market success. So the perfect management team from our perspective probably has a really, really strong technical founder aligned with a kind of commercial CEO who can go and deliver the technology into the market and build really strong relationships with customers.
And all of these companies sit within that automation and robotics theme?
Yes, so all of our companies are in that area. Over recent years, we've also sort of stretched into energy transition in as much as it delivers sort of automation and electrification into industries, which we think is important for productivity as well. Yeah.
And so can you talk us through some recent examples of companies you've backed in the fund?
Yes, well, I guess what's been really encouraging this year is some of the businesses which we backed right in the sort of middle of the pandemic often when other funds weren't investing at all, have really sort of come through. So 3 companies in particular have increased their valuations very substantially. First of all, a business called Zelim, which is effectively autonomous lifeboats, particularly for wind farms. So workers on wind farms are exposed to lots of dangers, and their systems make life just that little bit safer for people working in that environment, which is really sort of exciting. The second one that has come on really strongly this year is a business called Chemastery, which effectively is a chemical lab in a box and is really useful for drugs researchers and other forms of chemical scientists to do what they do quicker, faster, more repeatably. And then finally a business called Muddy Machines, which is a asparagus and sort of specialty vegetable harvesting robot, which is, just gaining great traction amongst farmers really all around the world as a way to sort of more efficiently grow and harvest those sorts of sort of specialty crops.
So how do you find all these investments?
Yeah, well, because we've been doing our investing for a number of years, we're well connected into sort of robotics labs in universities. There's quite a strong sort of founder ecosystem in the UK. We're quite well connected with the areas of Innovate UK, which are investing in robotics. So amongst all of these sort of clearing houses of companies, we're able to pick some really, really great companies and find them early and effectively help sort of buttress the first stage of their investment journey and kind of get them on the road, and also start getting them to think about what the sorts of milestones and achievements they're going to need to deliver to really commercialize their projects and their products. Yeah.
Because there can't be many SEIS qualifying automation and robotics businesses coming through each year, and you seem to get your fair share of them.
Well, I wouldn't say that actually. I think, in the UK, there's a pretty active sort of robotics and AI startup scene, and there are hundreds at least of new businesses being founded in any given year in this sector, and obviously we're looking to find the best ones and put capital behind them to grow them. And I guess the interesting thing, particularly about investing in some of these companies, kind of as I said before, is some of them have really amazing stories on how they can use their robotics to kind of transform the world in which we live in. And, that's very exciting for us.
Typically, how much are you investing in these companies when you find them?
Yeah, well, I mean, fortunately, this year, moving into the next tax year, the amount of money that can go into a single company under SEIS is increasing to £250,000. So at the entry level, we typically invest between £200,000 and £300,000 in a business as part of typically a sort of £500,000 first stage funding.
And with markets becoming more volatile in 22, has that affected the sector in any ways? Has it affected the way you invest at all?
Well, I think we have to be sort of cognizant that follow-on funding may become more tricky for companies. So we're encouraging our founders to be, especially prudent in the way that they use their capital resources for the next 18 months or so. Yeah. But as I said before, the extension of the SEIS scheme is a big help in that regard, because we're able to come into businesses just that little bit later. Previously, SEIS businesses could only have been trading for a maximum of 2 years. That's been extended now to 3 years. So we can go into slightly more mature companies, which is a benefit and helps to reduce the risk somewhat.
So that can make a real difference then?
It will do, yeah.
So to what extent do you get involved with these companies?
Yeah, well, that's essential to our operation, is to work really, really closely with founders and help them get on the right track so that they're able to raise more generalist forms of institutional capital downstream. So we join the board of every company that we invest in, and we work really closely with the founders on a sort of mentoring level to help them to start to think about becoming a sort of scale-up business leader. and help affect the sort of transformation in company maturity that they'll need to do to have a successful business that ultimately is ready to be sold or to float on the stock market.
So that's a good lead into exits. Have you heard of the exits in the portfolio?
Well, excitingly, actually, for our earliest sort of crop of companies, we are now kind of in the midst with a couple of them of having some quite interesting conversations which will deliver value back to investors. So keep an eye on this space over the course of the next few months, and we'll see
stuff.
what happens.
Fingers crossed.
Yeah.
So how risky is this part of the market? How risky is SEIS versus EIS?
Yes, well, investing in a business at its earliest stage is undeniably, a risky activity, and really our job as the operators of the fund is to manage those risks, and we do that in a number of ways. Firstly, of course, the tax regime under which we work gives us a substantial sort of risk coverage to the investor. Secondly, as I mentioned before, we have a portfolio approach, so we're going into a lot of different sectors and types of business to manage across the whole portfolio. And then finally, we're working closely with the businesses to give them the kind of greatest chance of success. But even doing all of that, we would expect that maybe a third of the businesses will fail over the course of sort of 3 or 4 years following investment. We'd expect maybe for the next third to maybe sort of get their money back, and then we're looking for the top third to be the ones that really deliver value for investors' portfolios, and that's certainly being borne out by our portfolio of historical investee companies today. Yeah.
Okay. So to sum up then, Dominic, for those who want to invest in a SES or EIS fund this year, why should they invest in the British Robotics Startup Fund?
Well, I think the Britbots funds are unique in that they give a kind of direct access to the sorts of businesses and technologies which are transforming the productivity of our economy, and really in doing so, they're a source of excellent returns for investors.
Dominic Keen of Britbots, thank you very much.
Thank you very much indeed.
If you are watching on YouTube, please press like and subscribe to the channel for more.